All right, good evening, everyone. Good evening once again. Welcome back to our channel. Today, we'll be talking about mastering forex time and technical analysis. So, we'll be looking at technical analysis on how we can be able to work along with our time and check every available time in terms of London time, New York time, Asia time, and all the rest. So for quite some days, we've not been able to post on this channel, and due to some other busy of tech activities we're having at hand. So we want to assure you that we are back and you will continue to receive all our technical and live trading as usual. Tomorrow we will be having a lot of live trading, most especially for beginners. If you are new to this channel, do like, subscribe, and share so that next time when we post things like this, you will not be missed out. So let's go ahead. Mastering forex timing and technical analysis is all about, in the dynamic world of forex trading, understanding time and forex technical analysis is crucial for success. This presentation will explore key concepts. What is that concept? The tools, the strategy, the trading time, the marketing trend, whether uptrend, downtrend, or sideways, all will be discussed on this channel as we post this video. Now, understanding the forex trading. What are forex trading? Forex trading, we talk about the currency pairs. Those are the major forex trading. And we also have synthetic that work with algorithm. We have cryptos that work with other cryptocurrencies. And we have futures that work with like NASDAQ and MUQ and others. So on this, we are going to be focusing on currency pair. Forex trading involves buying and selling of currency. We all know that. And in this situation, which can be up to 1%, 2% daily, but that depends on the market volatility at a particular time. So the market trend analysis recognizes market trend and price movement. So the important thing is that as every 70% of traders really rally on trend analysis, that means we trade on the trend analysis. Without the trend analysis, we may not be able to do anything meaningful when it comes to forex trading. Now, on the technical analysis is also important. Technical analysis employs historical price data for predicting future movement, with 80% of traders using indicators like moving average, RSI, and all the rest. But price action sometimes using trend line, chart patterns like head and shoulder, double bottom, double top, triple top, rising wedge, falling wedge, and all the rest. All these are different chart patterns we can also use. For other beginners, some they use the indicators like RSI, moving average, and MACD. So technical analysis tools. What are technical analysis? On this technical analysis, we'll be looking at the chart software, we'll be looking at the key indicators, we'll be looking at the Fibonacci retracement. Now, let's look at the chart software. Platforms like MetaTrader 4, Meta5 is what we use for our trading. And at this moment, we look at the time in the software, the data that are running in between this analysis to predict and analyze our next market. That is how the charting works. In that chart, that is where you see the uptrend, the downtrend. When it's buying on the bullish level is referred as uptrend. When it's bearish, selling on the bearish level is referred as downtrend. So these are levels where we understand. Then the data that emulates, that comes out at the volatility market time, is what the charting software uses in the MetaTrader 4 that enables it to operate effectively. So what are the key indicators? Key indicators that people use mostly are moving average, RSI, which is part of the major indicators that work very effectively, and MACD is also very effective, are crucial for identifying market trend. You use to get your uptrend, downtrend. There are settings, some set within 20, 30 on the moving average, some use 150. So all depends on what you are used to none of these things are not working. It works along with your time frame, whether you're using 15 minutes, 1 hour, 4 hours to take your trade. The RSI will determine the setting you will be considering you using. Now, the Fibonacci retracement is also a very key asset when it comes to trading. So Fibonacci works effectively in trading when it comes to a retracement. When there is a retracement, you use the Fibonacci within 0.5 and 0.62 to identify the level the market will retrace back. Right? That is how we use retracement. So these levels are vital for pinpointing potential reversal point in the market, allowing traders to set strategic entry and exit point effectively. So as a good trader, you must be able to run your Fibonacci from up to down to get your retracement, whether for a bullish or a bearish trend. So it's very important you understand how it works. Now, the technical analysis workflow that starts from the start point to the identify market trend, then you move to the trend clear. Now, that level, you know whether the trend is going to be uptrend or downtrend. When it's uptrend, it moves to proceed analysis, which is the up. Then if it's downtrend, it goes to research data. So at the end, you get result whether you are buying or you are selling that particular currency. So these are the market trends in the forex trading. We have the Euro USD, we have the JBP USD, we have the USD JPY, and we have the Euro USD. These are the major volatility pairs that are in the market. Now, each of these moves with pips. And if you check, the volatility of JBP USD is more higher compared to Euro USD and AUSD, which are also following the same trend. Then USD JPY. Then before you cannot talk about other pairs like NZD and co, which are lower in the pip movement or the market trend at this particular time. But for me, I advise traders to always take among these four trades or these four currencies are best for anybody to start with. How to execute a forex trading or a forex trade? One, analyze the market. You have to utilize technical indicators such as moving average, RSI, MACD. And other part, you use a price action. On the price action, you use the movement of the chart, the history of the chart to determine the chart formation, which also have candlesticks that form the chart. You have the double top, the triple top, double bottom, head and shoulders, inverse head and shoulders, and all the rest. Falling knife, falling wedge, rising wedge, etc. There are many. So these are part of strategic we use in trading and having a perfect execution when it comes to forex trading. Now, the second part is determine entry and exit point. You must be able to know when is your entry. That's what I mentioned on area of Fibonacci area or point of interest. When you have your POI, your POI is very key when it comes to putting your market. When you have higher low, higher high, higher low, higher high, at the reversal of that level, your point of interest is identified to know whether the market will reverse back at that particular time to form another higher high. Once there is any reversal, you intend to go for a buy. When there is reversal, when it's higher low, lower low, higher low, lower low, you have a point of interest to have your sell continuation. So that is part of the entry and exit point of executing a forex trade. Now let's look at placing the trade. Log into your trading platform, input your trade details including currency pairs, lot size and other type. So to execute this, the trade will definitely take process, most especially when you understand your lot size, your risk size and all the rest. But I'm going to talk much about risk size at this point so that you understand that risk is all about forex. Now, technical analysis to fundamental. What is technical? Technical is what I've just mentioned to you, which are using the indicators, using the chart patterns. All these are technical analysis. It reads the history of what has happened over the years, over the months, over the days to determine the future of the market. And it utilizes indicators in one way or the other to make decisions. So the best for short-term trading strategies and identifying entry and exit point is to use your technical analysis to determine the direction of the market. Now, what are the fundamental analysis? Fundamental analysis, economic indicators such as GDP, unemployment rates, and inflation, CPI, FOMC, and all the rest. All these are very, very critical when it comes to Forex. You can never trade a Forex perfectly if you don't understand or avoid for fundamentals analysis. So in my own case, I always advise people to make sure that you understand both sides, you know what fundamental is all about, you know what technical analysis is all about. So you trade perfectly when you understand fundamental, but fundamental work with data and analysis of economics that happen in the various countries, most especially the US and other European countries, determine how their currency pairs will move, or whether bullish or bearish. The power of technical analysis in forex trading has always been a success story for every trader. Higher success rate is about 60%. Traders using technical analysis outperform their peers. Then professional reliances or professional traders utilize technical indicators for decision. 2.5% of these rates increase decision accuracy. Technical analysis enhance trading precisions when it comes to trading. So in this case, we believe in technical analysis and we also believe in fundamental analysis. 60% technical and also 40% fundamental. But in my own case, in some kind of time, I place it 50-50, but fundamentals are not always. That is why technical has the upper hand, because you have more chances to use technical than fundamentals. What are the possible questions you may want to learn as a beginner or as an intermediate forex trader? What is the best time frame for technical analysis? If you have not had this experience or you don't know much, click the below on our link. You will see most of the videos where we have talked about most of these structures, time frame, and best time to trade in forex. The best time the best time frame depends on your trading style. Day traders often use 1 minute, 5 minutes, 15 minutes, while the swing traders may prefer 4 hours or 1 hour. So for me, I always recommend within 15 minutes to 4 hours to take your decision. If you are a day trader, 15 to 30 minutes is fine. If you are a swinger, 1 hour to 4 hours is fine. So how do I choose these right indicators? Indicators can be considered through your platform. You can go to the platform. So you check any of these indicators through the chart on your trading view. You select the indicators you want, go through the settings. The settings are depending on the time frame you're also choosing. So that is how indicators work. So can technical analysis be used for long time trading? Yes, perfectly. Technical analysis can be applied for long-term trading by using daily, weekly, or monthly charts to identify major trend and key support and resistance. Then coming down to use your lower time frame for your entry level, like 4 hours, 1 hour, 15 minutes. Is technical analysis reliable for predicting market movement? Perfectly yes. While technical analysis can provide insight into market trend and potential price movement, is not foolproof and should be used in conjunction with other analysis. So fundamentals are also important, because if market is going to take any economic news, there should be an action that will happen in between a period of time. So both sides are important, and as a good trader, you must always look both sides perfectly. So that is how it works. Now let's look at market sentiment indicators. This visual illustrates key market sentiment indicators such as the fear and greed indices, COT report, and social media sentiment analysis. Understanding this can enhance trading decision significantly. So market systems are very, very important. Sentiment indicators, chart analysis, fundamental analysis, put all together, you get the way forward. Trading strategies improve through technical analysis. Yes, I always believe that technical analysis is the perfect way and the best way for anybody to go into forex trading today. Success rate of technical analysis before is about 30%, but today is about 70%. Average trading duration is 5 days. Average duration for technical analysis about 2 days. Monthly profits within 200 to 800 as at it were, depends on your funding and depends on what you have in your account. Components of technical analysis, we have support and resistance, we have the price trend or the uptrend or downtrend. We have indicators and oscillators and RSI, those are the indicators you use to determine your trend and your chart patterns. Then you have chart patterns, which are actually the one that determine the history of every candle that have been performed over the years, over the months, and over the days. Then the volume are also analysis to show your bearish and your bullish. Now, the risk management is a very key factor that we must not overlook. Stop losses are very key. Take profit is also important, but the first thing you should consider when entering a trade is a stop loss. Stop loss means it automatically limits losses on trade, can be set as a fixed price or percentage, helps to maintain discipline and avoid emotional trading, allows traders to focus on trading or strategy rather than individual trades, can be adjusted as trade moves in favor. Adjusted preferably on break even for positive when trade moves in your favor, but in most cases, don't always adjust to expand trade to move on your negative room. A lot of traders have made these mistakes when trading is going on their against them, they keep adjusting their stop loss and they lose all their money. So position sizing also depends on what you are also considering doing. Adjust trade size based on account balance and risk. Help to manage exposure to any single trade. Involves calculating risk per trade as a percentage of total capital. Promote consistent risk management across multiple trades. Can enhance overall profitability by optimizing trade size. These are position size you consider, but in most cases I always tell my students, go to Forex calculator, download the Forex calculator, put the pen, put your amount and do all this analysis. We have demonstrated this in our charts, in most of our live trade and technical trade with our students on our video. If you don't have that, please do click and like our trade so that you can also have a lot of these videos that we have talked about all this in the previous chat and our training classes in different forums. The key takeaway of this training is importance of technical analysis. Technical analysis is very, very essential for forex trading. It allows traders today to have over 70% of profit. Combining analysis for success, it's always very good you combine your technical analysis and your fundamental analysis to give you accurate success in what you do. Continuous learning is crucial. Forex does not have a best time that you say you are a professional. Keep learning, keep improving, keep advancing. It gives you more room to do more in your trading career. In conclusion, we have analyzed all the basics of everything that we need to learn. But my advice is that be determined, be consistent, be focused, and know what you are doing. Don't overtrade, don't do revenge trading. As you do this, you will continue to have profit and have what it takes to be a successful forex trader. Thank you for viewing us.